Hello, very good morning to all, and welcome to today's Daily Dose of Market Insights. Kelvin here again. Very good morning to all. Today will be the Wednesday, the 7th of May, 2025. So as usual, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. Any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so as usual, before we jump straight into a very interesting two-way volatility movement that we are experiencing in the global markets right now, especially the US stock indices, let's have a recap what has taken shape yesterday in terms of news flow, economic data release, and as well as any key interesting events or news flow that has taken shape in early Asia session today as well before the start of our daily dose. So let us start with the state of the US stock market first in terms of the intraday performance of the US stock market. So yeah, excuse me, pardon me. All right, so yesterday the major US stock indices tumbled for the second consecutive session for the last 2 days, for Monday and Tuesday. So in the overnight yesterday's US session, which is Tuesday, 2 consecutive day of decline. So all the major stock indices decline, major US stock indices decline, pardon me. The S&P is down by decline or shed negative 0.8%. The Nasdaq 100 slightly lower, negative 0.9%, the Dow Jones 0.95%, and 1% decline on the Russell 2000. So the reason between these 2 consecutive days of weakness in the US stock market is primarily technical driven as well, because I highlighted since Monday the inherent short-term technical weakness that is being displayed on the hourly chart of the Nasdaq 100 and the US Wall Street 30. I do not want to go much that into detail. And also yesterday's news flow has already also reinforced this negative performance on the overnight US during the US session yesterday that inflicted the weakness on the major US stock indices. So what is this negative news flow? Is Trump pertaining that he actually downplayed trade negotiation and said he will dictate terms. So it seems to us that there's going to be another round of flip-flop decision making by the US White House administration because of this. So what he actually stated that he would prescribe trade tariff levels and trade concession for partners. That means countries looking to avoid higher duties, appearing to move away from the idea that he will engage in back and forth negotiation. That means, i.e., irregardless who are irregardless the trading negotiation outcome between the respective country officials and US officials likely to be represented by the US trade representative, including US Treasury Secretary Bassett. But overall, Trump will call the shots. All right, so he will dictate the terms. So, so because of this, market participants has starts to be a bit worried that in the last minute he may actually change whatever terms that he deemed like at the last second. And also another negative news flow is more pertaining to EU, the ongoing EU and US exploratory trade negotiation talk that kickstarted last month. So according to media report by Bloomberg, sources say that EU may eye 100 billion of US good with tariffs if talks fail. That means EU has really prepared documentation to slap US with additional 100 billion euro worth of duties if ongoing negotiation talk with US and the EU fail to make any positive breakthrough. So that actually spook markets and translate into a negative feedback loop into the major US stock indices yesterday. But what's interesting over here is that if you could see the Asia session, we start to see a strong rally on the Nasdaq and the E-mini futures previously they were up by close to 1%. So what do I mean by that? So if I were to look at the Nasdaq chart, Nasdaq 100 E-mini futures chart over here, let me share with you. Yeah, so this is the E-mini future chart over here. All right, so this little bar, bullish bar, was at the start of today's Asia session. All right, at the start of today's Asia session. So what we could see over here is that there's a big jump on the Nasdaq E-mini futures at the start of today's Asia session. Okay, it rallied as much as 1.45% at the opening Asia hour at 6 a.m. Singapore time before it tries to stage a pullback over here, and is now only up slightly by positive 0.6%, almost the same trajectory by the S&P 500 E-mini futures as well. All right, so the reason why we start to see a big jump at the start of today's Asia session by more than 1% is this US-China trade deal optimism that comes into the forefront of the market. What do I mean by this is because over at the news flow over here is that China has really appointed a representative, which is the Vice Premier He Li-Feng, to actually be that so-called chief trade negotiator, de facto chief trade negotiator representing China, and he will actually travel to Switzerland this weekend. All right, this weekend, 9 to 12 May, this weekend, for trade talks with US officials. All right, and the US officials representing US will be Treasury Secretary Bassett and US Trade Representative Jameson Creel. All right, so because of this particular news, positive news flow, it causes the US stock futures to rise, and that also causes the US dollar to actually dip push up as well in today's Asia session. Right, but overall, the trajectory of the US dollar since last Friday is still trending downwards based on this 5-day rolling performance of the dollar against the major currency. So later I'll explain to you guys over here that from a short-term technical perspective, this whatever positive news flow that is coming out in early Asia session today due to this optimism of US-China trade talks, because China, number one, has appointed a de facto chief trade negotiator, which is the vice premier vice premier He Lifeng, to actually have this weekend exploratory or preliminary trade talks with US officials represented by the Treasury Secretary and the Trade Representative. So these are still so-called first round of talk. So in this first round of talk, it doesn't immediately mean that US and China will start to sign a trade deal. Things could also potentially turn sour as well. All right, from a longer term, medium term perspective over here. So something to take a look out for over the weekend. What are the outcome of the first round of talks? And also, as we are speaking, there is also some overnight, I would say overnight, there's this geopolitical risk premium uptick, where this India and Pakistan there's this hostility between India and Pakistan over this they actually trade military strikes over after a Kashmir attack. All right, so India conducted targeted military strikes against Pakistan, which responded by shooting down 5 Indian jets in retaliation for a militant attack in Kashmir that killed 26 people. So there seems to be there's a rise in geopolitical risk premium, and this is a development story. And if this issue starts to escalate, right now market hasn't the risk, we call it asset, especially the US equity, hasn't priced in such geopolitical risk premium. If this starts to escalate further, and also do not forget, if this trade deal talks optimism is getting too rosy, but that's being priced in the market right now, because this is only the first round of talk, doesn't guarantee that it will lead to a successful US-China relationship going forward. And if this starts to be price, it seems to me that it's getting a bit rosy over here, and things could disappoint. And if disappointments start to seep into the market again, coupled with rising geopolitical risk premium due to this ongoing India and Pakistan conflict, that could actually see a negative feedback loop into the US stock market. All right, and over in China, in today's early Asia session, before the start of our daily dose, China Central Bank PBOC cuts key rates and as well as reserve ratio to actually soften the adverse negative impact on this ongoing US-China trade war 2.0. So what PBOC did is that it cut the 7-day reverse repurchase rate to 1.4% from 1.5%, and also it trimmed the reserve requirement ratio by commercial banks by 50 basis points, so allowing more liquidity to free up into the Chinese economy. So the RR cut will release about 1 trillion yuan in long-term liquidity back into the China financial system. So with more liquidity floating around in the Chinese economy, in a bid to actually stimulate demand, the first reaction on the China stock market was a big jump in today's Asia session. So earlier the Hang Seng Index jumped up by 1.5%. All right, so now it's actually trended down to 0.5%. So the reason, okay, let me explain to you. Let me open up the chart of the Hang Seng Index so that you guys could have a better view of the chart. All right, so this is the Hang Seng Cash Index over here. Okay, so right now the price action candle of the daily chart of the Hang Seng Index has now turned into a black Marabozu bearish candlestick. So the initial push up, all right, was almost 2.4%, the initial jump from yesterday close. Then now it's trended all the way down to only 0.5%. All right, only 0.5%. All right, so the reason of this this significant intraday bearish reversal was due to more of a technical configuration. Later I'll share with you why on the hourly chart of the Hang Seng Index. Because of this Asia morning push up of 2.3%, it lead to an extreme overbought level, and right now we may start to see a intraday minor corrective pullback taking shape by shaping a minor bearish reversal pullback for today on the Hang Seng Index. So later I'll touch on the intraday the intraday technical outlook on the Hong Kong 33 that could actually explain much more in greater detail. So the key thing over here is that when it comes to market trading in shorter term, there are a confluence of factors taken into account, especially if we are looking at a very short term perspective. We got to respect the price action of the instrument that we are looking at. All right, so yeah, another news flow I want to highlight over here is more pertaining to European, especially Germany. So in Germany, for those who followed my technical analysis outlook on the German 30 index, we are in the stage of a major medium term and major uptrend phase that is still intact. So yesterday we do have a intraday bearish bias on the Germany 30 due to a negative bearish technical element that has shown on the hourly chart of the Germany 30, and that has been reinforced earlier by the current elected German new chancellor. On the first attempt, he actually failed to get enough votes to be officially, we call it, made as the German chancellor. Then he only managed to secure preliminary backing as Germany new chancellor only on the second attempt in the later part of the European session yesterday, getting enough 325 votes in a repeat Germany ballot, Bundestag ballot. This is the name for the German parliament. So initially there was a scare stating that he may not even be officially made as a German chancellor, but after the second attempt, he managed to successfully gather enough votes, which are 325 votes in the German parliament, that officially announced him as the rightful new leader for Germany. So with his aggressive fiscal stimulus plan for Germany, and right now him being in power, his aggressive fiscal stimulus plan is likely to be able to actually pass through, and that in the long term gel well for the or reinforce the medium term and major uptrend phase of the Germany 30 index. But however, in the short terms, things may move different, because we know that for a price action perspective, any liquid tradable instrument don't go vertical up or vertical down, they oscillate. So that's why we have this daily dose of market insight on a daily basis to share with you guys what are these permutation of this intraday oscillation may expected to unfold based on the latest intraday technical elements of this highly liquid tradable instrument. All right, so with that, now let us now take a step back and move into the second segment of today's daily dose, which is the intraday technical outlook. Right after covering the first segment, which is the relevant news flow and events that has taken shape yesterday and in today's early Asia session. Okay, so with that, let me expand my screen so that you guys could have a better view of the charts. Okay, so let us start with the FX market first over here. Okay, starting with the euro dollar. So no change on the euro dollar as it continues to trade higher above the 20-day moving average. And if you realize that the 20-day moving average is also continues to slope upwards as well, indicating that some form of bullish biasness has starts to creep back into the euro dollar after close to about 2 weeks of softness over here in the euro dollar. So right now, for on the Asia session, do keep look in the European session, do keep a lookout on the first intermediate resistance for today at 113.70. Let me put it in writing over here. Okay, the screen is frozen for a while. Let me change this number. Yeah, I think give me a couple of seconds because it tends to get a bit lagging once we are into this kind of live webinar. All right, good. It's up. Okay, 113.70. Okay, first intermediate resistance for today, which is yesterday's US session high, 113.70. All right, so no change on the short-term pivotal support level, 1.1270 slash 1.1230. So if we start to see a breakout above 1.1370, that would increase the probability of our intraday trend bullish bias for today, exposing the next two near-term intermediate resistance on the intraday basis, 1.1425 followed by 1.1480 next. Only a breakdown below 1.1230 will jeopardize and invalidate today's intraday trend bullish bias to see the another round of corrective decline sequence unfolding, exposing the next support level at 1.1220, so it's 1.1120, pardon me, 110.50, which is the now turns into a significant pullback support from this former long-term circular descending channel that was previously in place from January 2008 high that was decisively broken up to the upside on 10th of April this year. Okay, so that's for the euro dollar. Next up will be the sterling dollar. Right, so the sterling dollar managed to be much more bullish in terms of the movement of the price action movement yesterday. It's managed to break above that descending trend line that kept 2 weeks of about 1 week of 1.5 week of weakness since 29th of April minor swing high on the sterling dollar. So this is have clearly been taken out over here. So this will be a green line, okay, a dotted green line as my pullback, which is pullback support level. So given the bullish breakout of 133.40 yesterday, I would actually tighten my short-term pivotal support level for today towards the pullback of this pullback line, the pullback support line of that former minor descending trend line that kept the boost since 29th of April. All right, so this will be my tighten short-term pivotal support level. Okay, let me put it in writing. Okay, so that should be 1.33 figure level. Okay, let me push it up so that you guys could see the price, the chart of the sterling dollar. Okay, okay, 133 figure. level. This will be the next support level. Okay, let me tidy it up. Okay, good. All right, so no change. RSI still continues to hold above a parallel ascending trend line above the 50 level mark, indicating that possibility that the higher chance that this short-term bullish momentum still remains intact for the sterling dollar. So with that minor bullish breakup that was seen yesterday that I highlight to you guys earlier, I will tighten the short-term pivotal support level for today at the 133 figure level, which is also coming very close to this rising 20-day moving average as well, confluencing very closing to it at 133 figure. So maintain that intraday trend bullish bias for the sterling dollar. Next two intermediate resistance level to watch for today will be at 134.20 followed by 134.80. Only a breakdown and hourly close below 133 figure level will negate today's bullish tone to actually see another round of corrective decline sequence unfolding, exposing the next support level at 132.05. If 132.05 can't hold, the price action may see a further drop to expose the next near-term support level at 131.20. So overall, in a nutshell, still maintain the intraday trend bullish bias on the sterling dollar using a tightened short-term pivotal support for today at 133 figure level. Why? Because of yesterday's minor bullish breakup. Okay, from this minor descending trend line that kept the 1.5 weeks of softness in the US dollar, in the sterling dollar previously since 29th of April. Next up will be the Aussie dollar. So the Aussie dollar yesterday continues to churn higher and broke above the 64.95 short-term pivotal resistance level, where we actually anticipated a minor pullback towards the 63.70, and this minor pullback didn't take shape, and price action now decisively broke above the 200-day moving average. So with that, there could be potentially more upside potential coming into play on the Aussie dollar given the strength of the price action that's being seen on the Australia dollar yesterday. So with that, given its clearance above the 200-day moving average, indicating more potential upside strength coming into the picture for the Aussie dollar. So I'll be using yesterday's European session low, we saw confluence with the low on Asia session Monday that managed to stage this minor V-shaped recovery at 64 figure level. So as long as 64 figure level short-term pivotal support holds for today on the Aussie dollar, we'll flip to an intraday trend bullish bias. Got to respect the positive price action. Next intermediate resistance level to watch 65.20 / 65.55 followed by 65.95 next. So 65.95 next is inside this congestion area here from 6th of November and 12th of November last year, right? And if we were to do the Fibo extension, a very short-term one, from the start of this minor uptrend move from the low of 30th of April, where it's formed a base and it starts to move higher, you do that Fibo extension. Okay, that also coincide 1.236 times on the Aussie dollar. All right, the 0.6595. Okay, oops, sorry. However, if we start to see a bearish reversal downwards and a breakdown for hourly close below 64.40, then today's intraday bullish bias will be invalidated to see a choppy downward drift to expose the next near-term support level at 63.70, which correspond to the rising 20-day moving average. So that's for the Aussie dollar. Okay, lastly will be the dollar yen. So the dollar yen broke down as expected, and it broke below the minor ascending channel support level, right? This is not in pink. Okay, so it broke below this minor ascending channel support formally from 22nd of April, and also broke below the 20-day moving average. All right, so it almost hit our support level at the 142 figure level before staging a bounce in today's Asia session due to the US-China trade deal optimism team play that is back into the market. So from a technical analysis perspective, price action still remains kind of negative on the dollar yen. That means we're talking about dollar still remains weak against the yen as it broke down below the 20-day moving average and also break down below the former minor ascending channel support from the low of 22nd of April now turns into a pullback resistance level. So given that the hourly RSI has started to already exit from the oversold level and still has some room to go before hitting the overbought level, potentially there could be a chance of a bounce right now in the European session back towards the pullback line of this, or the pullback resistance of this former minor ascending channel support level. All right, now turns into a pullback support. And if we do the Fibo retracement of that entire slide that has taken shape since last Friday all the way down to yesterday's US session low, that coincide with the 50% Fibo retracement. So with that, I'll be using a slightly adjusted tighten pivotal resistance for today at 144.25. So I've been watching this 144.25 level very closely in the European session as price action try to shape a bounce back towards this 144.25 resistance level. And if we start to see signs of a bearish candlestick appearing, then the dollar yen could be in the start of another impulsive intraday downward drift movement, revisiting 142 figure level. A breakdown below 142 figure level exposes 141 next, which is the minor congestion area of 21st of April and 22nd of April. And if we do the Fibo retracement of that previous rally from 22nd of April all the way up to the high of last Friday, that coincide with the 76.4 Fibo retracement as well. Right, but however, if price action starts to have an hourly close and a breakout above 144.25, then today's intraday trend bearish bias will be invalidated to see the continuation of a minor recovery, revisiting 145.20 and even 146.10 next, which is confluencing with the downward sloping 50-day moving average. So i.e. in a nutshell, potentially at the start of the European session, given that the hourly RSI has really exited from the overbought level and has exited from the oversold level and has yet hit the overbought level, as we are speaking right now, there could be some form of residual bounce that could take shape in the European session. Residual bounce, short-term pivotal resistance to look out for will be very close to the 144.25. Tighten short-term pivotal resistance that we have for today. As long as this 144.25 doesn't have a bullish breakout with an hourly close above it, we'll still maintain our intraday trend bearish bias on the dollar yen. That means i.e. bounce before a potential decline that could take shape at around the 144.25 short-term pivotal resistance level. So that's for the dollar yen, and that also conclude the intraday technical outlook on the major US dollar pair. Up next will be the major stock indices, starting with the Hong Kong 33, representing the Hang Seng Index. So the Hong Kong 33 almost hit we were bullish yesterday, if you recall, with the resistance level at 23,360 and almost hit it, and also now coming to the upper boundary of this minor ascending channel that I drew from the low of 16th of April. And what's interesting over here is that the hourly RSI has started to shape a bearish divergence, all right, indicating that today's early morning push up of that 2.3% move on the Hang Seng Index that I shared with you all earlier on in the first segment of today's daily dose is kind of overextended up move, and this overextended up move is being represented by the lack of upside momentum by this bearish divergence that's been shown on the hourly RSI. So with that, there could be a potential intraday minor corrective pullback or mean reversion counter trend decline that is in motion right now, potentially on the Hong Kong 33, at least on the intraday basis, on a very short term basis. So with that, from an intraday perspective, we will flip to a bearish bias using 23,360 as my short-term pivotal resistance level. Two near-term support level to watch out for today will be 22,380 followed by 22,110, which is the lower limit of this minor ascending channel and this former minor range configuration bullish breakout now turns into a pullback support level as well at 22,110. So once price action approach very closely this 22,110, I'll be watching out signs for bullish reversal candlestick pattern on the lower time frame to gauge whether the Hong Kong 33 will resume its impulsive up movement. So overall, the medium-term uptrend still remains intact on the Hong Kong 33, and right now what we are seeing is only a potential minor corrective decline, mean reversion, a potential minor corrective pullback, mean reversion decline sequence that may unfold within its longer-term, medium-term uptrend phase. So we will be using 23,360 as my short-term pivotal resistance level for this potential corrective pullback scenario to unfold. All right. Now, next up will be the Japan 225 representing the Nikkei 225. So with that, it continues to trade sideways over here, holding below the 37,380 short-term pivotal resistance level that we have yesterday since Monday. So still no change, still maintaining that potential trend bearish bias, but price action got to break down fast below the 36,650, where it managed to survive at the close of yesterday US session before staging that bounce. And after that bounce, this bounce is due to that US-China trade deal, trade talks optimism, and after that it managed to erase of this initial pop-up at the start of the Asia session. All right, but still can't break below the 36,650. So do watch out for this 36,650 as we head into the start of the European session thereafter. If we're able to successfully have an hourly close below 36,650 with a bearish breakdown below it with an hourly close, then it will increase the odds of today's intraday bearish bias on the Japan 225, exposing the next near-term support level in the first step at 36,200, which is the 50-day moving average, I think as a similar support level as well. However, if price action suddenly have a bullish move upwards and hourly bullish breakout and with an hourly close above 37,380, today's intraday trend bearish bias will invalidated to revisit a higher intermediate resistance level at 38,135, which also correspond to the 200-day moving average. Next up will be the Germany 30. So the Germany 30 representing the German DAX, we have a bearish bias yesterday. So the bearish bias hit our first support at 23,070 before it actually bounces up higher. All right. So what we could see over here is that elements are kind of mixed right now. It's a bit mixed right now. So what we could see is that the hourly RSI has started to shape a higher low right over here, and after yesterday's bounce it also shaped a higher low as well, and it's now holding above the 50 level mark, indicating some form of upside momentum has started to creep back into the Germany 30. So with that, I will have a neutrality stance for today on the Germany 30. So yesterday's pivotal resistance will be turned into the upper limit of that neutrality zone at 23,480, and the lower limit will be yesterday's support level that managed to survive at 23,070. Okay, put it in dark blue. All right, so flip to a neutrality stance to watch out for these two range: upper limit at 23,480, lower limit at 23,070. Unless we have a bullish break at the start of the European session above 23,480, then we will start to see another round of bullish trend bias taking shape on the German 30 on an intraday basis, exposing the next intermediate resistance at 23,920. So for now, due to mixed element, we will flip to a neutrality stance first between 23,480 and 23,070. So that's for the Germany 30. Next up will be the major US stock indices, starting with the Wall Street. Okay, so the Wall Street yesterday managed to hit our first support level, or the upper limit of the first support zone at 40,690 / 40,430. Then thereafter it bounces off, come break above the 50-day moving average, acting as a resistance level, and also our short-term pivotal resistance still remains intact since this Monday, which is 41,470, 41,740. So still no change, still using 41,470 / 41,740 as my short-term pivotal resistance zone. still maintaining that potential intraday trend bearish bias, but price action got to break fast below the 40,690/40,430 first intermediate support zone. Only a breakdown below 40,430 will increase the odds of this trend bearish bias to expose the next near-term support level at 39,720. However, a bullish reversal and price action right above with hourly close above 41,470 will, or 41,740 will invalidate today's intraday trend bearish bias to see us all the way a squeeze up towards 42,080/42,400. So that's our medium term pivotal resistance zone on the US Wall Street 30, representing the Dow Jones Industrial Average. We're also conferencing with the 200-day moving average as well. Lastly will be the Nasdaq 100. So the Nasdaq 100 drifted down lower, and right now almost hit our first support level at 19,600 before staging a bounce because of that trade deal optimism news flow between US and China, with that ongoing weekend trade talks between US and key US and China officials. So level still remains unchanged. So we'll be still watching the 20,250, 20,390 pivotal resistance zone. With that zone still pretty much intact, can't break above it, we'll still maintain that intraday trend bearish bias for the Nasdaq 100. First support level to watch out for today will be 19,600. Again, for sure, yesterday managed to survive right above this level. Only a breakdown below 19,600 will increase the probability of today's trend bearish bias to expose the next near-term support level at 19,020/18,770, which is conferencing with the rising 20-day moving average, and as well as the minor ascending trend line from the low of 7th of April. However, if price action starts to stage a bullish breakout and the hourly close above 20,390, and that is also a clear breakout above the 200-day moving average, the trend bearish bias will be invalidated for the Nasdaq 100, and we may now start to see a much more substantial recovery on the Nasdaq 100, exposing the next near-term resistance in first step at 20,630 and even 21,055 next. So that's for the Nasdaq 100. Next up will be the commodities market, starting with gold XAU/USD. So gold yesterday we do have a bullish bias, and the bullish bias has really hit our first resistance level at 34.20 before shaping that pullback of negative 1.62% in today's Asia session. And what we could see right now over here is that the hourly RSI has really exited from the overbought level, and if you were to do that parallel ascending trend line support, this level has also been taken out as well. Okay, at the bottom, okay, this parallel ascending trend line support, and potentially right now is about to actually magnetically heading down towards the oversold level. Okay, it hasn't hit the oversold region yet. That means, i.e., this pullback that we are seeing right now in Asia session could continue to extend during the European session. So the support to watch out for during the European session, first support will be at 33.09 over here, 33.09. So that's the first support level. And if I do the Fibo retracement of that 2 days of rally starting from Monday all the way up to yesterday's intraday swing high of 34.22, okay, 34, okay, yeah, this is 34.35, all right, 34.35 over here, 34.35. That actually is the 61.8% Fibo retracement, and the 76.4 Fibo retracement is slightly lower, conferencing with this rising 20-day moving average at around 32.65 over here. So with that, I mean, this is the zone to watch out for. That means the first minor pullback that may take shape until 33.09, maximum 32.65. All right. So given that this is still a start of a second leg of another impulsive upmove sequence, because of that bullish breakout of this bullish flag formation previously. Right, so this is a bullish flag formation that was taken out after 2 weeks of weakness from this all-time high on 22nd of April. So whatever negative movement that we may see in the European session is more likely a minor corrective pullback phase rather than the start of a multi-day to multi-week bearish trend phase. All right, so with that, given that the higher time frame technical element is still positive, I will instead use any minor pullback weakness that is inherent in the price action on the hourly chart of gold right now to maintain my trend bearish bias. That means it's weakness after a minor potential weakness that may take shape first before the bullish momentum starts to creep back into the market, because the higher time frame is still positive. So a minor pullback support level to watch for today, there will be 3309, my first support, and the pivotal support will be 3265, which is the confluence the rising 20-day moving average. So as long as this 3265 is not surpassed to the downside, potentially gold XAU/USD may resume its bullish momentum movement, retesting 3420 slash 3435 next. All right, so this is the high 435. All right, above 32435 they seek a retest on the current all-time high at 3500. Only hourly close and a breakdown below 3265 will invalidate today's intraday trend bearish bias after that minor pullback takes shape, and see a choppy downward drift to expose the next near-term support level at 3194 slash 3162. All right, so that's for gold XAU/USD. Still maintaining that intraday trend bearish bias after a potential minor corrective pullback that may unfold first during the European session thereafter. Next up will be the West Texas oil. So West Texas oil continues to drift higher, but still can't break above, but still below that 60-35 short-term pivotal resistance that we have since Monday. And what we could see right now is that the hourly RSI has started to shape a bearish divergence over here. So with this bearish divergence that starts to be inherent in the hourly RSI, that means indicating that the bounce that has taken shape yesterday is losing upside momentum, and there could be a risk of further weakness coming back into the West Texas crude oil for today. So as long as 60-35, pardon me, short-term pivotal resistance is not surpassed to the upside, we will still maintain that intraday trend bearish bias. Two key support level to watch out for today in first step will be 58 figure level. A breakdown below 58 figure level may revisit the 9 April minus swing low, pardon me, at 55.50. Only an hourly close and a breakout above 60.35 will invalidate today's intraday trend bearish bias to see another round of corrective rebound sequence unfolding, exposing the next near-term resistance level at 62.39, followed by 63.88. All right, so that sum up today's intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key events and data to look out for today, which is very important. Why? Because today is FOMC day. Right, so before FOMC, let's take a look at the European session. Is there any key data to look out for as well? Okay, let me expand my screen. All right, so today will be Wednesday. So at the start of the European session, nothing interesting except that we come towards 5 p.m. Singapore time, where we have retail sales figure for Eurozone that is out at 5 p.m. Singapore time that could impact the euro dollar, the euro crosses, and the Germany 30 price action movement. Then thereafter will be nothing much over here. And for those who are trading West Texas crude oil, so this on a weekly basis, it could actually also impact the short-term intraday movement on WTI crude. Is the weekly EIA crude oil stockpile change at 10:30 p.m. Singapore time. And with that, we approach the FOMC decision, 2 a.m. Singapore time, early Thursday, 8th of May. Very likely market is expecting no change at 4.5%, and this also is being expressed by the short-term interest rate futures contract as well, the Fed funds futures contract, interest rate contract compiled by the CME Fed Watch 2. So if you look at the CME Fed Watch 2, the current pricing by the 30-day Fed funds future contract, market is expecting almost 100%, 97% for the Fed to maintain its Fed funds rate at 4.25% and 4.5% at 2 a.m. Singapore time today after that is the release of their decision. And if you look at from an aggregated perspective down the road, that means we're talking about other down the road futures contract, market participants is looking at the next cut to only come in July. All right, even in June, only 33% chance that it will be reduced to 25 basis point to bring it down to 4%, but at the higher chance of 99% that it will come at it will likely come at the 30th of July meeting. So after the 30th of July meeting, market participants is expecting another cut of 25 basis point on the 17th of September over here at to bring it down to 3.75%. Then after that, no change in October, 47%, only 47% chance that it will go down to 3.5, and another cut before the year end at 10th of December, 81% chance be quite high to bring the Fed funds rate to 3.5%. So what market participant is pricing right now in the Fed funds 30-day futures contract compiled by the CME Fed Watch 2, they are looking at potentially 3 interest rate cuts so far of 25 basis point each in 2025. So that is slightly higher than the 2 interest rate cut as portrayed by the latest Fed funds dot plot. Okay, so market is much more dovish than what the Federal Reserve officials are projecting in the previous dot plot. So hence market participants will be listening very closely to the 2:30 a.m. Fed chair press conference to have a gauge whether the Fed is still in a wait and see mode, because in the last few weeks before today's FOMC, more Federal Reserve officials are more concerned about sticky inflation rather than potential growth slowdown created by the uncertainty surrounding the current US White House administration way of dealing the US trade tariffs. All right, so it will be kind of a two-way volatility. So at 2:30 a.m. Singapore time today. All right, because Fed Chair Powell may starts to change his tonality, and if he starts to actually portray to be much more dovish over here, market participants may increase the expectation of the interest rate cut cycle by the Fed, and that could potentially lead to a kind of a revival in the major US stock indices as well. Okay, so something to look out for at 2:30 a.m. Singapore time today. All right, at 2:30 a.m. Singapore time tomorrow, which is early Thursday, pardon me, 8th of May. Okay, so with that, that ends today's Daily Dose of Market Insights. I wish you all a great day ahead, and we shall unpack more interesting insights tomorrow. See you guys.